Happy New Year. It's Thursday, January 9th, 2020. I'm Steve Houston with Compass Communications, and I'm here with Joe Terril of Terril and Company, and we're going to talk a little bit about markets and investing for the new year. And Joe, this is the first full week of the new year, and businesses are revving up plans to accomplish their goals this year. What do you see moving forward that might impact those plans?
I think they'll be able to do it because basically I expect the economy to stay strong. We are very low unemployment, consumers in good shape. If they've got the right plans, they should be able to execute.
Okay. So as we look forward in 2020, are there 2 or 3 stocks that kind of pique your interest?
Yeah, in general, most stocks are fully priced. There's not a lot of bargains out there, but there are some that we like. I would mention American Airlines. The stock's as low as it's been basically in 5 or 6 years. American sells at, if you will, when you do apples to apples, oranges to oranges, American sells at half the multiple that other airlines do. They, in the past, had a business model of taking on more debt to buy brand new planes and buy back stock. The market has really soured on them because of the amount of debt they've taken on, and they've been hurt, no doubt, by the 737 MAX.
Yeah.
On the positive side, the management is now telling us we're going to change that business model. We're going to execute on using all our cash flow to pay down debt. They've reached settlements with Boeing. A lot of the money they haven't made on the 737 MAX, Boeing's going to have to pay them for it and is paying all the airlines for it. So if they can execute on their business model for this year, the stock's going to do real well. If they don't, I think that institutional investors will balk and throw out the management and bring in somebody else.
And tell us about the gas company that you like.
Western Gas is a MLP pipeline company. Most of the energy stocks are still incredible bargains vis-a-vis what the choices are, paying big distribution yields. Western Gas is as low as it is because they have a disproportionate amount of their business now with Occidental Petroleum. Occidental Petroleum last year bought out Anadarko. Occidental Petroleum is a major shareholder. People are fearful that Occidental Petroleum will sell the stock. It's down by 30–40% over where it was when Occidental bought out Anadarko. We don't see that happening. Occidental has been very adamant about, not at this price, we have no interest in selling our interest in Western Gas at these prices. So you see a company that has firm contracts in place to transport natural gas and yields better than 10%, and it's 50% below where it's sold at just a year ago. I think it's a good bargain.
Yeah, poised to do better. What about Bosch Pharma?
Well, Bosch Pharmaceutical is Bausch and Lomb, if you will. It'd take me 20 minutes to explain the backdrop to the company. It was a Bill Ackman roll-up at one point. It was the old Valiant Pharmaceuticals. It didn't work out in what the management and Ackman wanted to do. The stock ended up being a disaster. But there's new management in place now, and they have been in place for a couple of years. They're executing a brand new business model. They're paying down debt. They're bringing out new products. They're quote unquote sticking to their business of sell the products, generate cash, pay down debt, improve products to improve sales. So this is a company that I think this year will be very important. Execute on the business model, get debt paid down. As you do, investors will reward the stock with a much higher price as new management delevers the company, if you will.
And finally, Coherent, you were telling me that's another one you like.
Yeah, Coherent is a laser manufacturer, and the stock's 175 hours today. It's for more aggressive accounts. It's not at a recent low, although it's well off its high. But Coherent is one that I think you have to buy with the idea you're going to forget about it for a couple of years. Coherent manufactures lasers that allow flat panel display screen people, whether it's your phone, your iPad, your personal computer. The new screens are coming as OLED, organic light emitting diodes, rather than LED. The move towards OLED, in order to manufacture an OLED product, you've got to buy the laser from Coherent. When Apple first came out with their OLED phone, and they priced it at $1,000, the market's backed way off and wouldn't buy the phone. It made people think, well, OLED isn't going to be the thing of the future because the consumer won't pay for it. No, we disagree. It is going to be the thing of the future. It's a matter of getting the public used to the fact. The main reason it's the thing of the future is the 5G networks that we're going to are going to demand a lot of energy, and an OLED phone has a battery life that's significantly more than a non-OLED phone, plus the clarity, etc. So there's other reasons on that. And then the other thing that I like Coherent about, even though the business isn't there right now, they have an opportunity to do a lot of national defense business, manufacturing lasers to counter drone attacks and such things. Those drone attacks are low-tech ways that the bad people, if you will, can wreak havoc and cause problems. And one of the solutions for that that's coming in the future is going to be, well, if you can use a laser and point it at the drone, it'll destroy the operating system of the drone, so it'll crash. So they won't be able to fly a drone over one of our ships in harbor and drop, a bomb on the ship. They won't be able to fly the drone over one of our military installations. So even though there's no sales right there for Coherent yet, I believe they're in prime position a couple years from now to be doing quite a bit in sales there. So Coherent isn't the low price that some of the other stocks I mentioned are, but I think there's a lot more potential there than what the market's given it credit for.
Interesting prospects. Well, thank you, Joe. That's Joe Terril, founder of Terril & Company, independent wealth management with $723 million in discretionary assets under management. Joe, let's see how the first quarter unfolds, and let's meet again, say, in about a month or so.
Yeah, that's true. The one thing this year, Steve, that I wanted to mention, because I do get asked by people, what could upset the economy, what could upset the markets? And that is if inflation picks up. And it has shown just little signs in the last 2 to 3 months around the world of picking up, whether it's in Japan, Europe, or the United States. We'll watch very closely as this year proceeds to see, was that just a one-off event, or is there a trend developing there of inflation picking up around the world? We'll watch it, I'm sure, in our interviews during 2020. Remember to ask me about it, because if that is happening and inflation around the world is picking up, then all investments, stocks, bonds, gold, oil, all have to be reevaluated.
Always important to watch those headwinds. Thank you for joining us.